Good morning, everybody. It is the 15th of October. We are Signal Centre Talking Ball. I'm Joe Neighbourne. I'm joined by Steve O'Hare. How you doing, Steve?
Yeah, all good, thanks. All good.
Our tops are very bright this morning, considering the
The sun's out.
bloodbath.
Yeah, maybe that's
I'm
what
wearing
it
red for a bloodbath.
is. I'm wearing orange because it is a bit above a bloodbath, but it's okay. I did okay at my talking ball trade yesterday, so
All
it's
right,
not
stop going
quite
on
as
about it.
not quite as bloody as yours. Well, this morning's been horrible, isn't it? It's been the European session, obviously kicked off, and both FTSE and DAX and CAC have collapsed.
Yes, it's looking pretty ugly out there today, and I think it's really a combination of things that have caused it. We had yesterday or overnight a stalemate on the US stimulus, and I think a lot of the markets across the world have been sort of holding out hope for a big old deal to come through. It now looks like there is going to be a delay on that until after the election, so we've got 3 weeks to wait until we find out the result of the election. Well, that's not even true either, is it? We've got the election
No.
3 weeks from today. Then there's going to be loads of ongoing counting and accusations of fraud, no doubt, from one of the participants. So who knows when we'll actually find out what the result of the election will actually be. But what this all does is push the whole stimulus thing down the road. And it seems as though the two sides remain very far apart in their discussions. Although there could be some smaller, more targeted stimulus packages that help certain sectors. So that hasn't been ruled out, but the sort of go big or go home approach from Donald Trump, that's nowhere near getting done. So that's stopping markets from progressing today, and that's why we're seeing the risk off move. We've also got, of course, the COVID-19 restrictions. New restrictions coming in everywhere. It looks like there's going to be an imminent change in the rules in London. There has been calls for this circuit breaker England-wide restrictions as well. And also I noticed yesterday France have announced a curfew in Paris and other cities, which will prevent people from being outside between certain hours of the day. I think it was from 9 o'clock until 4 o'clock in the morning or something like that. And also we've got the familiar story around Brexit and the deadline coming to nothing. The pound did rebound from a 1 week low, as we will go through on some charts shortly, but no breakthrough from either side, and they've now pushed back the deadline to the first few days of November. So just kicking that can a little bit further down the road in hope that someone breaks, I guess, and we can get a deal done.
Yeah, it's not good, is it? It's all a bit of a mess out there.
So plenty going on the news front. I guess we should have a dig into some charts and see what's going on that front. Steve, you got anything to kick us off with?
Really just focusing again on the indices. This was from a couple of days ago, trade idea, and it's obviously this. We were looking at this level around about the 61.8% to maybe provide some sort of support, but it's plowed through it this morning.
Hot knife through butter on that.
Yeah. So next level in the FTSE is 57.93 before real sort of like line in the sand 57.69. You can see that we can go back to that's a really sort of important level of support. I was going to say solid, but we don't know whether it's solid. But if we sort of like zoom out a little bit, obviously we've been talking about this week. This was at the start of the week. We were seeing levels approaching the top of the bearish channel, and it's completely engulfed last week's price action and is lower. So for me, a break below these sort of levels, 57.67, and we are looking to retest the bottom of this channel. So DAX, again, that's a bit of a similar thing. It's engulfing last week's price action, not quite yet. So there's maybe a little bit more to go on the DAX. On the shorter term time frame, we've already been stopped out on our trade idea this morning, which was looking to buy a dip. If we were to rewrite that now, we'd be obviously looking to sell into any pullback, because this these support levels have been broken from previously, really around these levels that they've sort of gone and looks pretty negative now. CAC we're short of on the intraday trade ideas. That's found a little bit of support at the previous swing lows, but probably the main level to break there, 48.40. So bears will be targeting that level, and this is from October. Get some fibs on there. 61.8% Fibonacci retracement. That's maybe another reason why it's held there. 78.6 is around a 4,807. Any other really ones I was watching was the commodities. Looking at gold, it seems to be holding pat at the moment, holding around this 1900 level. On the daily chart, we've seen this sort of like upward trending support. Let's remove the downward trending resistance because we like gold, and it was through that level. If we redraw that line, we've got support coming in at 1886, and buy and dips seems to be the way to go in gold. But obviously with these equity markets selling off as aggressively as they are, we've got to be a little bit careful with that, because obviously going back to March, we know what happened. Everyone seemed to think that gold was a safe haven, and equity markets collapsed and gold collapsed as well.
Yeah, so gold, what they put that down to was the fact that people had done well on gold, so they were liquidating their gold positions in order to fund positions that they were losing on elsewhere in equities. So
yeah, could be the same sort of thing again.
Possibly.
I mean,
gold hasn't really done that much in the recent weeks. If you look at it on a daily chart, let's just get my one up. We've been talking about this sort of consolidation here. So I can't imagine there's too many people that are making money in this sort of period here, but it might be a case of it's not lost as much money as some of the other stuff. So they might take the hit on it, maybe. But it did trade more like a risk asset than what it has done previously. So it's sort of more correlated to what equities were doing.
I think as well, if we go back to March, if you bring a weekly chart up on gold, and you go back to March, obviously we had quite an aggressive sell-off from the $1,700 level down to $1,450. That move there, but considering that, if you think about it, we are whatever we are, 20%. We've been up to 20% higher from the 1,700 level. So it's sort of, from the 1,400 level, 1,450 level, it's higher from there.
22%.
Yeah, 22% we got to the highs. So I would say that whoever, the bigger funds, bigger firms who are long of gold and liquidated to fund their equity positions have got back into gold, and they are in gold now, and probably the same thing could happen. But obviously overall bullish of gold, but I'm a little bit cautious short term. I'd be a little bit cautious on it, but long term, I would be long of gold.
Yeah, especially if they're going to do this stimulus package, which looks like it will happen at some point. Obviously, that will devalue the dollar, and therefore we could see that drop off quite considerably. Goldman Sachs at the start of the week saying they expect that the dollar could go down to levels seen back in 2018, which takes it down to these levels, 88.25. So a fair bit of downside there. Let's just get a weekly chart on so we can squeeze it all on the same page. What are we talking there? So from current levels, that's sort of another 5.5% drop.
Yeah.
Which doesn't sound a lot, but it is when you look at how dollar index moves. It doesn't move in sort of massive percentage moves at a time. Even that whole move there is sort of 16%. So yeah, quite interesting. On the other FX front, anything with an Oz in it today is taking my interest because it's taking a bit of a hammering. It's by far and away the worst performing currency today. This is a daily chart on Aussie CAD to start with. Just noting there's some big breakdowns happening here. We've got obviously this huge rally up from March, a bit of a consolidation or correction lower, but now we're starting to break down below these lows. So maybe you could argue that it's now not a correction and we're actually going to see a top pattern form there and a continuation lower in the medium term. So keep an eye out for that.
The RBA, the Royal Bank of Australia, is it the Royal Bank of Australia?
Yes.
RBA. Yeah, they're mulling longer purchases. Apparently,
Right.
I got
Okay.
that from the Saxo guys.
So trying to
So
weaken their currency
yeah,
effectively, but
yeah.
yeah. So this is Aussie Swiss. Again, big rally up from March, consolidation here within a wedge, but now we're starting to break down. So, this is a fairly similar theme that we're seeing across the board. You can see there, this support level here at 64.97 has done a pretty good job at containing price throughout this period. But now it looks like it's finally breaking down. Hasn't broken down and closed below on a daily, so there is a chance that it could rally back up, but it's looking a little bit dodgy to me, I think that. Aussie yen, I'd be looking for a break of this level here, so that's holding up a little bit better than the other Aussie currency, Aussie pairs, Aussie New Zealand dollar. Bit of a breakdown there. And Aussie dollar breakdown from a bit of a wedge pattern, possibly a continuation lower there. One that did look quite interesting was Euro Aussie. So this has been real sideways price action for a number of weeks, going back to sort of June. And on a few occasions, we've attempted to get above this 165.80-ish level. A bit of a range, I suppose, rather than a specific level. But if that breaks there at 65.86, then I think we could see a pretty decent move to the upside over the coming weeks. So keep an eye on that as well if you're looking for something that could potentially have a big move in the coming weeks. Those are the sort of things you want to target and try and get behind if you can. Sterling Oz, another one that could be potentially forming a bit of a bottom pattern there. If you see, maybe this is a left shoulder here, maybe a head here, maybe a small right shoulder here, or maybe that will form a bigger right shoulder in the coming weeks. But again, looking for maybe a breakout of this sort of level here to trigger a decent move to the upside over the coming weeks.
Okay.
So yeah, that's what mainly took my focus. Obviously, sterling has been very volatile with what's going on with the Brexit chats at the moment. If you look at some of the commentaries, they're all saying, sterling's doing this, that, and the other. But if you sort of take stock of a longer-term view on the daily charts, you can see really it's just not really going anywhere. We are seeing some big ranges and some big tails and spikes, but overall not really making much progress. Same can be said for sterling Swiss, sterling yen, and cable as well. Overall that looks like it's still heading up, which suggests dollar weakness, but not really much going on. Not many opportunities I don't foresee there at this moment in time, but that could change. Anything else, Steve?
Just a couple of other indices. I'm looking at the weekly chart, obviously in Hang Seng. This was the one I was talking about a few weeks back when it was really underperforming everything else. It's posting a shooting star candle, and if you sort of see the reaction we've had from these type of reversal candles, the shooting star posted back on 6th of July, the week of 6th of July here, led to the sell-off to the swing low, and then we had a bearish outside candle posted here, led to an aggressive sell-off here, and another shooting star is negative. So if prices remain under pressure by Friday and we do get a close maybe below this is it 24,160 level? No, that's what it's trading now, 24,110 level. Then I would expect a bit more negativity going into next week. So in that sort of basic channel. Also NASDAQ, just wanted to sort of highlight a little chart that we drew yesterday. If we're going to talk about gun to the head.
I'll get it over and done with then.
I know. I'm sure we said yesterday that we won't close it out at 9 o'clock. We'll just carry on the next day. But maybe I'm wrong.
Yeah,
I'm not wrong often. But yeah, so this is obviously this this head and shoulders formation was confirmed by this candle here at 4 o'clock, the break and the close below. We had we like to see a retest of that, and we saw that, and that was another opportunity to get short right there, 12.043. I thought the best level was 12.030. So I was a little bit wrong with that when I got back into my shorts late last night. And then sort of like, yeah, so it's a little bit further to go maybe to sort of like just get this measured move target.
Yeah, well, you absolutely nailed that yesterday. So obviously we did our guns to the head challenge where we pick ideas right there and then, which we think will play out between now and 9 o'clock tonight. And Steve went uber aggressive on that. He picked a trade where he was looking for a 12R outcome. So he's looking to make 12 times how much he was risking on that particular trade. It could have been better at the 9 o'clock close than it actually was, but you still managed to get 6.37R on that one. So very well done. I mean, you've put me right in the shadow there. I had a decent win on dollar index of 1.58, but it doesn't really compare to what you did yesterday. But all in all, you've put a real big jump on our P&L overall. Let's have a look at the stats. So as you can see there, we've got a real big spike higher as a result of Steve's massive win yesterday on the NASDAQ, and now we're just shy of our all-time highs on the P&L front. So it only takes a couple of trades to get things moving again. So pressure's on, Steve. You've now got to get us above that all-time high level. Have you got another humdinger that you can serve up for us this morning?
Well, the good thing about this, I'm going to, obviously my risk will always be 1. So I'm only going to be risking whatever you risk on this. What is it, £23 or something?
Yeah, something like that. I mean, what is our risk at the moment? So just for context, for people that may be new to this, we risk 1% of our cash pot. We start with £1,000, talking hypothetically, and we risk 1% of our pot on each trade. And obviously this 1% amount rises and falls based on the success of our call. So at the moment, when we lose 1R, it's about £21. So tomorrow or today it'll be £23 we're risking on a per trade basis.
Okay, so that's why obviously going for these like humdingers like yesterday, 12 to 1. Was it 12 to 1? I think it was something like that.
12 to 1, yeah.
Which is like backing a 12 to 1 horse, really, if you think about it. So, these sort of ideas don't happen frequently, as you don't get 12 to 1 winners on the horses. Not that we should be talking about gambling, because this is more of a educated process. I didn't want to say guess. Yeah, I haven't even thought about this. I'm still sort of like a little bit
still basking in the glory of yesterday.
Yeah, I mean, I think the acceleration lower this morning is a bit overdone. As you can see, the sort of reaction higher in the FTSE now, but the pressure's still on, and I would rather sell into a rally in the indices. So I might look elsewhere. I'll run through Forex quickly. Do you want? Have you got one, Joe?
No.
And I'll run through Forex.
I was hoping that you did, and I was trying to find one while he's waiting.
Okay, let me sort of think. Well, thinking about Aussie that you were talking about. I mean, that's sort of like, again, that's coming down to a support level, and it's bounced off it. So, what's Euro Yen doing? Euro Yen's broken that support. That looks a little bit naughty. Let's go for Euro Yen, just based on the fact that it's sold off. It's sort of like trading around this congestion area previously back in the early October, but there's nothing really in the way of support slowing it down really till 123. I'm being forced into this one. I don't like it, so I'm going to keep it really tight. We're getting in at 123.38.
So now you've had a big win, you're getting all defensive, are you?
No, I'm going to be very aggressive with this one. 123.48. So it's only a 123.48. So, and 123.08. So again, it's a 3-to-1 risk reward, so it's not defensive at all. Targeting a move down to 123.08, but a very tight stop. So it's only a 10 tick stop, or 10 pips, or 10 thingies, whatever you want to call them.
Lovely jubbly. Good luck. I found an idea. I'm going to go with you on this and sell euro. This is the euro sterling chart. So this is an hourly chart. Let's just make it a 4-hour for highlighting this trend. So in the very short term, we do have a bit of a downward or bearish bias on this at the moment. Earlier in the week, I was a buyer of euro sterling because I was looking to play this range in the blue with the blue lines. So we were trading nicely within this range. I was looking to buy it around here. I got stopped out on that little move below it, but that happens. So I didn't actually make any money on it. But what I'm looking at now is that we've broken this range, maybe seen a retest of it, maybe a little bit of a bearish flag. If you take this as the flagpole, this is the flag. Maybe we could see some downward acceleration on that. So I'm actually targeting a measured move, which is the size of the range. So I've just basically projected the size of the range lower, which takes it down to 88.93. So I'm selling now at 90.22, placing a stop loss above the highs that we've seen over the last couple of hours at 90.45, targeting a move down to 88.94, as I said, which would be 5.5R if that plays out from here.
Okay, cool.
So let's see. Two trades, both on the euro. Let's see what happens. Okay, anything else, Steve?
No, that's pretty much it for me.
Okay, so calendar today, we've got the release of the weekly US jobless claims. That's due at 1:30 as always, but at the same time, we have New York Empire State Manufacturing Index. We also have the Philly Fed Manufacturing Index, all out at 1:30. So keep an eye on the US indices and US crosses around about that time. We then have the crude inventory numbers at 4 p.m. Let's just take a quick look at oil actually while we're on that, because it looks a little bit stuck to me at the moment. We have been speaking about these levels in the past. So the gap that was created back in March, I've drawn a grey box on here just to sort of highlight the resistance band that seems to be preventing prices from moving to the upside. So very much sideways on oil at the moment. In the very short term, 41.72 is the key level to watch. Sellers continue to get back into the trade around about that level, probably looking for a move down to the lower end of that range and possibly a break. Maybe we could be in the process of forming a top, which we spoke about previously, something along those lines, which the neckline would come in somewhere between 36.76 to 36.42. So oil inventories out at 4 o'clock. We've also got the US earnings season underway now, and the big names to keep an eye out for today are Morgan Stanley and Honeywell International. So those are the biggest two I could pick out of the list of companies reporting today.
Lovely.
I think that's it.
Brilliant.
Cool. Right. Good luck, everybody, and we'll be back tomorrow morning.
Excellent. Cheers, Joe.
Cheers, Em. Bye.
Bye.